Welcome to the Academy of Ideas Economy Forum. My name's Rob Lyons and I'm the convener of the forum. This event was originally different in two ways. First of all, we were going to do it in real life rather than online. And secondly, it was envisaged as a simple response to Sajid Javid's first budget as Chancellor of the Exchequer. A chance to look at how the Conservative government's economic policy would work out in practice. Obviously, events have overtaken us. Sajid Javid is no longer the Chancellor. Also, we have the COVID-19 pandemic, which has pretty much thrown any short-term economic policy off course. However, while we want to talk about the effects of COVID-19, we also want to situate how the government is reacting in the context of, for want of a better term, what we might call Johnsonomics. So our speaker is Phil Mullan. He's a regular at our forums. Phil is an economist and business manager and author most recently of Creative Destruction, How to Start an Economic Renaissance. Phil will introduce the discussion for about 20 minutes, and then we'll have plenty of time for your thoughts and questions. So over to you, Phil.
Learn as we all learn. Anyway, Rob, really thanks very much for setting all this up for us. I know it's one of the early experiments that we're doing with this. I know there'll be many others being organized, already advertised, so let's hope this one goes well. Okay, I think one of the catchphrases of the pandemic so far is that crises change everything. For instance, Sarah Lunnan, a spokesperson for Extinction Rebellion, remarked last week, "Everything now has changed. The Conservatives have just nationalized the economy. So what we do now," she said, "is very interesting." Now that last phrase sounds a bit ominous to me, but I'll return to that at the end. Now, of course, lots will change with the pandemic, not least thousands of businesses have already gone under and may not return. And this could rise to hundreds of thousands unless the government acts immediately to deliver on its business support pledges. And if the government fails here in the same way that it's been failing on virus testing, personal protective equipment, and so on, then it is literally the case that millions of individuals and families will endure great hardship with little prospect of getting their old jobs back. But however, despite the changes which will be brought about by this huge economic disruption, I think much from the past will continue too. Because when crises are seen to change things, this is often less because of the crisis itself and more the existing trends. So when it comes to Johnsonomics, as Rob said, what we're using as a term to describe the economic policies of the Johnson government, I also think that there will be much continuity into the future. Crises rarely erase the past completely, and the way this pandemic is panning out, so far at least, this will be no different. Now, in 6 months' time, and after the unpredictable impact of an even more extended lockdown, we might need a different emphasis on what's changed fundamentally. But for today, with regard to the economic policies, the crisis looks like extending existing practices and crystallizing previous tendencies. Now, the element of continuity, I think, also runs through the different narratives already characterizing Johnsonomics, of which we have, because of the pandemic, three, what I call BC, DC, and AC. So before, during, and after coronavirus is contained. So the BC narrative, the before coronavirus narrative, was about delivering on Johnson's levelling up mantra. Mainly, it seemed, through focusing economic policy on the regions outside the Southeast, especially infrastructure spending on transport and communications, and spreading out research and development operations. Now, the DC narrative today is that this has all been overtaken. Policy has shifted to a qualitatively different mode, simply doing whatever it takes, the old cliche, to ensure as much of business and employment survives the lockdown recession. And although there is great concern, which I certainly share, about the speed and the comprehensiveness of implementing Chancellor Rishi Sunak's packages of support, I think there is still broad agreement that the intention of these economic policies is entirely justified, and I share it, to preserve as much as possible of business structures and especially of people's incomes, so that after the crisis passes, the economy is better placed to get back. And this brings us to the third phase what is likely to materialize in policy AC after coronavirus. So to what extent will the responses to the pandemic accelerate? To what extent will they possibly interrupt or overtake pre-existing features of economic policy? Now, because nobody can say how deep and how long the current recession will be, since we don't know how extensive the shutting down of the country will be, we also don't therefore know the scale of the destruction of business operations that government policy might have to respond to. Nor can we know about political consequences which might flow from the circumstances of social discontent and the much higher joblessness and financial hardship as a result of a prolonged shutdown. But in the absence of a sort of coronavirus catalyzed Brexit referendum scale political shock, although that's obviously possible, but in the absence of that, and although specific policy responses are unknowable, I think there are some clear policy themes, and I'm going to look at three of these. Now, to help contextualize these, I think we should take a critical stance to some of the already established, but I would argue spurious, characterizations of Johnsonomics that were present before the pandemic, but have been reinforced during it. First, there's the idea that Boris Johnson is a distinctively pragmatic, non-ideological, one-nation prime minister. Boris himself peddles this idea, not least at the weekend when he took that dig at his supposedly ideological predecessor, Margaret Thatcher, when he said there really is such a thing as society in response to the pandemic, referring to that frequently quoted but often misinterpreted comment by Thatcher in 1987 in a Woman's Own interview when she said that comment, there is no such thing as society. Now, the notion of Johnson's pragmatism being unusual is, I think, completely untrue. His record of reactive muddling through, which has been certainly on full display during the pandemic, has been pretty much the norm amongst Britain's prime ministers ever since the late 1970s, following the bipartisan abandonment of mixed economy Keynesianism. I think ever since then, you can say that economic policy has been defined mostly by reacting to things when they happen, guided mostly by the shared perspective of seeking to preserve what exists, what I would call traditional small c conservatism. And that tradition includes not just Tory leaders since the 1980s, but Labour ones too. Thus, this idea of conservative pragmatism as being a distinguishing feature of Johnsonomics is not true. This approach, I think, continues to foster, as we're seeing today, a very short-termist reactive form of policymaking that is very often unequal to the challenges of modern life, as the inadequacies in responding to the pandemic seem to be demonstrating so far. Second, an even more delusional narrative is that under Johnson, the Tories have succumbed to the leftist idea that the state is better than the market. Ever since December's election, we've had these Panglossian Labour Party supporters claiming that the Labour Party may have narrowly lost the election for some unusual temporary factors, but that it had won the intellectual argument over the merits of state intervention. And as Jeremy Corbyn said last week, I didn't think, he said, it would only take 3 months for me to be proved absolutely right. Now, we could just say, dream on, Jeremy, and let him get into his coronavirus-free retirement. And we could say that to John McDonnell and Keir Starmer and all the others in the leadership that looks like replacing him. But I think we should also recognize that this mythical narrative has resonance among some young people, and that may survive this pandemic too. I think the answer to this Labourist bluster brings us to a third and much more common perspective about Johnsonomics, that it is defined by a revival of the big state, which Sunak's rhetorical responses to the pandemic, although so far as we know, are mostly unfulfilled, but he seems to have illustrated that in his statements. But the idea that BC or DC Johnsonomics is characterized by the return of economic statism is also, I think, hugely misleading. Because not only is the Johnson government not enacting any alternative agenda of the Labour Party, more pertinently, it is entirely consistent with the tradition of conservative parties of the past just like it is with Christian democratic parties in Europe and with Republican parties in the United States. They have generally been economic interventionist parties throughout their lives, something that has been more by necessity rather than ideological choice. Just going back briefly to the late 19th century, ever since then, mainstream governments across advanced countries have relied on the state to help support their economies through good times and bad. Regulationism, state spending have been on a steady secular rise ever since. And in even more modern times, since the end of the post-war boom at the end of the 60s, increasing state economic interventionism has been the norm under governments of all stripes. Now, initially in the 1970s, this was about attempting to counter the effects of the generalized economic crisis. But when this failed, with the onset of stagflation, don't worry, I'm not going to get into a long exegesis on economic history, but when this failed, governments mostly shifted to seek to conserve the economy as much as possible. And this, as we well know, went alongside failing and falling business investment, lower rates of productivity growth, and the way that rising government spending ever since has often had to be financed not from inadequate tax revenues, but by expanding debt. All features, all trends which have been building up bigger problems for the future, which is the future of today. I think Johnsonomics is a break from previous state interventions policies, not so much in the scale of its reach into and across the economy, but that it is doing so in a more overt and unabashed way, which has not been the norm for the last 30 years. But even then, it's not entirely new what we're getting today from Johnson's policies, and will likely to get after the pandemic is over. Because ever since the financial crash in 2008, the calls from within the mainstream for more openly activist government policies has been on the rise. There's been a recognition since then about the weakness, particularly since about 2010, but the weakness or really the absence of any economic recovery. And that has prompted the need for stronger government economic policies and a discussion which has become much more prominent. And then with the shock of the 2016 popular votes in America and Britain, that added to the shift towards what I would say is the more sort of like shameless pursuit of state economic measures. So that today, the rhetoric of small or minimal statism has had an increasingly small and minimal following. Now, instead, the post-2008 experiences has led to a rising clamor for government to adopt a more coordinated mode of state intervention, for vigorous fiscal policies to complement those ultra-loose monetary policies that, although irreversible, as we've seen in the last couple of years, are incapable and are recognized as being incapable of reviving growth. For years now, many former and even incumbent central bankers have been demanding that governments, like the British government, recognize that monetary policy cannot be expected to be, the term goes, the only game in town, and have been arguing that fiscal activism is required even if we simply want to stabilize the economy. Similarly, over the last decade, since the financial crisis, the notion of state industrial policies have made a comeback with many in many advanced countries. Public infrastructure investment, in particular, has assumed an increased significance as a means for trying to inspire some economic growth to benefit the so-called left behinds. Now, although governments, not least in Britain, have been slow to translate fine-sounding industrial strategy documents into meaningful practices, this rehabilitation of industrial policies long preceded Johnson taking over as Prime Minister. The openly interventionist course flagged up by the Johnson administration is thus, I would argue, neither a break from British practice, nor is it uniquely British. State activism, with governments brazenly playing a bigger economic role again, is therefore, I will argue, the first legacy that we can anticipate from the pandemic, not just to inform Johnsonomics, but the approach to economic policy across the advanced countries. In effect, treasuries and finance ministers are asking us to forget everything they told us about public debt being an anathema, an abomination. They're now saying we have to spend to sustain the economy in this pandemic. So we'll print money, we'll borrow funds, and then we'll sort out managing the debt and other implications later. And I think the relevant point here is that now this Rubicon has been passed, it'll be very difficult for them to turn it back again in the medium term. Having said that, we should be clear that this departure by government to doing openly what it had previously been doing more guardedly and surreptitiously does not mean it will be sufficient on its own to revive the economy. We should recall that Japan entered its secular stagnation earlier than all the other industrialized countries after its financial crash back at the start of the 1990s. And it's been running a continuous fiscal stimulus ever since then. Average annual public deficits of about 5% a year have left it with a national debt of about 240% of GDP against the sort of 80 to 100% of most other advanced countries. But tellingly, of course, it is still stuck in its depression. Now, a big reason for this is that by propping up its economy, a lot of this extra state spending has been increasing the extent of corporate dependency on the state. This applies not just to Japan, where that concept of zombie businesses originated, but across the rest of the industrialized world. This wider system of corporate welfare, I think, points to the way established businesses rely on state operations for a lot of their income, especially on public orders, on state contracts and so on, and on state subsidies of multiple types. In effect, many businesses are removed from the realm of market competition now. Now, with the pandemic justifying governments, and not just Johnson's, undisguised economic activism, equally, we're now seeing businesses blatantly seeking state support, something which they would have been much more reticent to do, 15, 20 years ago, and even in the earlier part of this decade. Now, with businesses falling over themselves to seek government help to survive, I think we can say there are very few pretensions to talking up the virtues of the free market and free competition. And I think one potential consequence of increased economic interventionism through the pandemic is that as corporate dependency widens, then industrial concentration, that's the growth of bigger and bigger firms dominating sectors, will extend, just as we saw in the banking sector after the financial crisis. And even when that's not deliberate, government efforts to sustain the economy, now of course the explicit message during the pandemic, these inevitably tend to favor already established incumbent businesses, not just because they're regarded collectively as too important to fail, but also because the inevitable rules-based conditions that accompany state bailouts, business subsidies, are much harder and often impossible to meet for startups and loss-making scaling up businesses. It's just not easy for a young, ambitious, initially unprofitable firm to show its commercial viability to the intermediary banks that provide the government's emergency loans and grants. And you'll probably heard many interviews with business people of that type over the last few days. Buying economic survival, both DC and AC, through closer public-private linkages, I think will reinforce this corporate welfare and help sustain parastatal companies, thereby prolonging the long depression. Thus, today's disaster prevention measures from Johnsonomics could well consolidate a less furtive, but still stultifying economic interventionism, and importantly, with little public debate and discussion about that. A second and potentially more dangerous feature that could follow on is the greater acceptance, not just of state intervention, but of the flagrant national protectionism that this usually entails. We've already seen that in the last few weeks in the unashamed pursuit of national protectionist policies, not just in Germany and France putting on export bans on medical equipment and so on, but also in Britain and the USA. The pandemic has already heightened anxieties in some quarters about national self-sufficiency over medical protective equipment, over foodstuffs, even over vaccine developments. And that's been contributing to border controls on goods as well as on people. Now, this prompts, I think, the danger of galvanizing nationalist policies that could aggravate the pre-existing international tensions. A third pandemic reinforced theme in economic policy, and this is one I'll end with, is how the coronavirus world, or the post-coronavirus world, could reinforce the regulation of so-called sustainable, responsible, stakeholding, caring capitalism. Again, this is not out of the blue. It follows a decade and more of increasingly virulent business bashing, not just from corporate governance campaigners, but also from within governments and from within business itself. In response to the economy shutdown, there's already plenty of discussion going on about holding businesses to account, working out who are the business heroes, who are the business villains. Did they recently pay dividends to their shareholders, as has been thrown at EasyJet and several other companies, as if paying dividends is some heinous crime. How much of a pay cut are the chief executives volunteering to take? How do they treat their workers and their freelance contractors? These are all the discussions, I think, which will escalate. Now, I think clearly some corporate deeds during this crisis, in particular badly treating your workers or hiking prices to consumers, are genuinely serious matters, and they should be pursued by all of us. Profiteering from a crisis, of which we've seen examples in the last week, is completely reprehensible. But there's also a danger here of buck passing by politicians who I think would be better occupied holding their elected government to account for what they did or failed to do, BC and DC. Because if on the basis of disreputable practices by a few business leaders, Johnsonomic policies regulate deeper into businesses' non-business, but so-called social responsibilities, then I think that's something which would be bad for business, bad for government, accountability, and bad for democracy. And I think these dangers of this third theme are especially acute if the restrictive economic policies justified by government as necessary to deal with this health catastrophe are then extended without full and proper political engagement and accountability into other areas that are very likely to damage economic growth. As alluded to at the start, I think proponents of tougher environmental policies have already been using the pandemic to assert the battle over COVID-19 needs to be extended to fight carbon emissions too. Already much effort is going into linking coronavirus to climate change, claiming that humans are messing with nature, being the unspecific but common cause to both of them. For instance, Inger Andersen, the UN's environmental chief, claims that nature is sending us a message, both with coronavirus and with the ongoing climate-related disturbances of bad weather and storms and so on. Andersen argues that humanity is placing too many pressures on the natural world with damaging consequences, and has warned that failing to take care of the planet meant also not taking care of ourselves. So she said our health entirely depends on the climate and the other organisms we share the planet with. Others similarly talk of the pandemic as a unique opportunity to manage a triple crisis: a health, economic, and environmental crisis. The Planetary Emergency Partnership, which is aligned to the Club of Rome, protests too that COVID-19 reveals that we are, quote, one humanity living on one planet, and that this planet is in the midst of a deeper and longer term crisis of climate change and biodiversity loss. Accordingly, and I think this is a point for us to think about, the partnership is calling for post-pandemic economic recovery plans to prioritize the health of the planet as being synonymous with the health of the people. Now, I think such propositions draw out one of the dangers of the overblown analogy between coronavirus and fighting a world war. Engaging in life and death contests with other countries can require, as we know from history, can require abrupt and sometimes illiberal actions without being able to seek mandates from the electorate. Most people accept that such wartime decisions might have to be taken quickly and justifying the temporary waiving of democratic approval. The problem is that the analogy of warlike conditions is being extended not just to a short-term necessity, like overcoming COVID-19, but to longer-term issues too. For instance, you may or you may not agree that there is a climate emergency. I do not. But what is an emergency for our democracy is if the pandemic is used to normalize emergency policies that entrench restrictions on economic growth without extensive public debate and authorization. So to conclude, I think we are in the midst of a man-made, not a natural economic collapse that arises from responding to a pandemic above all considerations, and that's justified. The danger is that post-pandemic economic policies take this as a precedent for putting other objectives, such as propping up a zombie economy, national self-sufficiency, regulating business behaviors, and perhaps most prominently, reducing carbon emissions, above all other considerations and without real public examination. If this happens, it could extend and deepen what is a chronic economic condition that would have even more serious long-term implications for growth and prosperity than today's self-generated but acute recession. This is not a direction that we should slip into under the pretext that it's an emergency, just like coronavirus. Something must be done. And for a start there, but I think we require and should be all calling for genuine public discussion over the pros and cons of AC Johnsonomics, the economic policies which we will see in the months and years to come.